Chris's business is in the scaling up phase, which means he is accelerating his growth plans. But what does that actually mean? Does growth sit under a one-size-fits-all umbrella? Or is it a complex process best tailored to an organization's specific requirements? Let's take a look.
What are the forms through which a business or company can grow?
This is a very valid question to ask because people talk about growth so often, but growth is such a broad and general term. Are we talking about growth in terms of size by geographical presence or headcount? Or are we referring to achieving growth in terms of financial strength through increased revenue and profitability? Or perhaps growth in sophistication of technology and efficiency, or compliance in ESG matters which are now becoming important non-financial factors to consider. Whatever forms of growth you may be considering, there are two common ways in which businesses or companies take, and they are organic growth or inorganic growth. Organic growth refers to growth through internal processes and relying on the company's own resources. It is expanding your existing business. This may mean developing new goods and services, growing new markets, setting up new offices in new locations, by reallocating your own resources, or increasing your workforce and establishing new networks and relationships. Inorganic growth refers to growth through acquiring new businesses by way of mergers, acquisitions, takeovers, or joint ventures.
Can you tell me about the pros and cons of each type of growth form?
Some pros of organic growth are, firstly, you have a good understanding of your business, so you can steer growth according to your own resources, structure, strategies, culture, and preferred timing. Secondly, you have more control over decisions you make, direction you take, and have common understanding of the existing leadership team. Thirdly, it allows gradual and more sustainable growth, signaling a steady business with a sound and strong foundation. Finally, there is less risk of unexpected disruption, particularly in relation to integration challenges, redundancies, changes in leadership team, dynamics, culture, sudden change in size, and many more changes that acquisitions bring. Some cons of organic growth are growth is likely to be slower and more gradual, as you may be limited by the current resources available. Also, developing new products and services, new markets, and new geographical locations may be untested and risky, or can sometimes go beyond the skill sets of the existing leadership team and their people. Otherwise, you may be overtaken by your competitors if they move ahead of the curve faster than you do.